One stock that's going to be on top recall this morning will be Zomato. Posted numbers that on the face of it were a clear beat to what the street was expecting, but a couple of things have stood out. The fact that they've gone out with an aggressive fundraising plans despite sitting on cash. Secondly, they also have a significant portion, which is 10% of the top line, is part of Treasury Income. All of those things does mean that shareholder value is probably going to see some erosion. Management also talked about the fact that operational EBITDA has been lower because they're on an expansion spree. So what we are seeing is some amount of cash burn that could be taking place for Zomato. But the expert Gaurav Malhotra, ED of Axis Capital, now joins in to talk to us about what he makes of Zomato's earnings and the fact that they've gone out with an aggressive fundraising plan. Hi Gaurav, good morning. Thanks for joining in. I'll start with the most pertinent question. The company is looking to raise 10,000, is already sitting on 10,000 crores roughly. But they've announced a fundraise plan of 8,500 crores over the next couple of weeks and months. What is Mr. Goyal thinking? What is the plan of the company? Because if you already have so much of cash you're sitting on, why dilute stakeholder value in that sense, right? I mean, is there a cash burn we're anticipating? What is your reading?
See, this is more of a signaling issue in our view, right? You have their two major competitors, Swiggy raising around 5,000 crores of fresh money. Zepto has raised reasonable sum of money, and as media reports say, they are raising a little bit more. So I think so. This is more of a signaling issue. If you recall, this is a very InfoEdge-ish way of doing things, right? That and InfoEdge is a owner in Zomato as well. That whenever you see that there could be some of chance of increased competition, you don't wait for that event to take place. You sort of beef up your balance sheet in case you have to use it. Not saying that they will have to use it, but this is more of a signaling issue in our view.
Okay. The question that comes to mind is whether this fundraise and the commentary, more importantly, right? So are they linked to very high competitive intensity? I'm just trying to understand. There are 3 or 4 other biggies which are trying to get into quick commerce. We know that QC or Blinkit is the way forward for, or the big growth trigger for Zomato perceptibly. So if the heightened competitive intensity is going to be there in the quick commerce space, could it be a telecom of the 2000s, wherein there are a lot of players, lot of growth opportunities, great for the consumer, maybe not as good for the business? How do you think about this?
See, the thing is, this is not so we don't think so that this is in anticipation of some major competitive intensity spiking up, right? I think so everyone understands, including the companies in the private market, unlisted companies, that right now, while investors even in the private space would be interested and excited on the quick commerce opportunity, but this is not the time of 2021, etc., when you would have gotten a lot of money for basically just buying GOV without any associated profitability or path to profitability. So we don't think that is what is going to happen. Even yesterday, the company said that it's not as if with this fundraise, their dark store expansion, which they have guided to say 1,000 by March 25, 2,000 by December 26, those get accelerated, because any which ways, if you see, they are already sitting on more than 10,000 crores of cash. So it's not as if this will help them expand or accelerate it faster. Like I said, see, this is you have other players raising money. You also want to ensure and give a signal that, look, your balance sheet is actually the strongest amongst everyone. So everyone needs to be careful from a competitive trying to increase the competitive intensity perspective.
Gaurav, I just want to ask you this, and of course, if you have a view on this one, because what also stood out for me is, while the numbers on the face of it look very healthy and promising, adjusted EBITDA in this segment is negative. It's about negative 8 crores of loss. Management has indicated that they are struggling with expanding margins. They're also on an expansion spree, not just with regard to dark stores, but also with increasing the warehousing capacity. Now, do you feel like this could be a concern for the next couple of quarters, because this is an expensive stock, and I don't know how much will shareholders be willing to wait or pay that premium while the company is going through that expansion phase, which anyway should be in the price?
Yeah. See, so the way to think about it is that, the company is growing very rapidly, right? It's growing its GOV more than 100% year on year. The dark store numbers is in fact expanding. So if in this environment, right, they are managing to keep that margin at that break-even-ish level, which is that 0.1% adjusted EBITDA margin for quick commerce, I think so that's fine, right? I think so it's to be expected that when you are expanding so quickly, obviously the margins will take a little bit of a backseat. But having said that, it's not as if that expansion is leading to dilution in margins, which is where the concern would be. So these margins have remained pretty flattish over the last, say, at least from last quarter onward, the margins have remained flattish despite this big expansion. So I don't think so that is something to be worried about.
That they're sitting on 400 crores of treasury, and some may say that they are masking, their performance on back of course, how a lot of the treasury income is coming in, which may mean that operationally things are still tough.
See, any which way, this is a company wherein people, investors, us analysts are essentially looking at the EBITDA and the above EBITDA metrics, right? It's not as if this company is profitable and hence you are sort of valuing it on PE basis. So obviously the treasury income is a large component given the kind of cash which is on the books. But I don't think so that in itself is being looked upon, either positively or negatively from the perspective of valuing the business.
So, Gaurav, what is your view on Hyperpure? Can this have the potential to become the next Zomato, actually?
See, this is obviously a business which is very fast growing, and we do feel that it has certain synergies with the dark store potentially, right? Because the dark store can then become the way for Zomato to to give the restaurants what they require. So this is something which is a longer term opportunity. Obviously, the top line growth is very strong here, but right now the margins are not improving. So this is something which will take time to sort of evolve over a period of time.
Gaurav, very quick word on District, because that's the next best thing investors are betting on. Are you anticipating any roadblocks? Dipinder Goel has said that in the next 4 weeks they should roll out and have the play. It should be a plug and play model that they would be at. Are you anticipating anything that stands out for you that could probably create a resistance in these plans?
No, really don't think so. What we had actually seen when this whole news was announced of them acquiring Paytm's business is that there are a lot of synergies between the two businesses in terms of who the target audience is and what they are sort of offering in terms of events, experiences, etc. And obviously the company has shown very good execution in its history. Transitioning from a classified to food delivery to quick commerce. So we do expect that there should not be any major roadblocks in the execution and rollout of District.
Lastly, Gaurav, quick take on the call at the current price. What are you expecting and what is your target?
So our target is 319 rupees, which is around 25% upside from here. So we remain bullish on the business. I think so. All the operating metrics are going in the right direction. There is a large opportunity in quick commerce. It's relatively underpenetrated. And obviously, Zomato has shown very good execution.
We'll leave it at that. Thanks so much for joining in today and giving us your thoughts. Really appreciate your time.